Hey everyone, it's Chris Johnson from Monday Morning. About a week ago, Nvidia signaled a death cross. Now, you may think that may happen all the time, but it's only 12 other instances since 2000. So this is a rare occurrence, and it has an impact on where the stock is going to head over the next 3 or 6 months. I'm going to break down all the historical data for you, and it's going to help us understand exactly where Nvidia is going. Most importantly, I'm going to give you two different ways that you can either, one, protect the shares of Nvidia that you don't want to sell, or two, just trade this trend for profits because the trend has turned unfriendly. Stick with me, 5 or 10 minutes, you'll learn something new and you'll be a better investor for it. Let's jump into it. All right, like I said, let's jump into this. We've got a lot to cover. I'm going to do it in 10, maybe 12 minutes or so. First of all, I'm going to talk about what happened with that death cross. A little technical analysis 101 where we'll talk about what a death cross is. Then I'm going to go through the 12 historical references that we've got for Nvidia since 2000 that have happened on the stock. And that are the 12 signals that are similar to this and what they did in terms of return and which one we're coming more in line with. We'll look very quickly at the 2022 death cross and what happened there. And then finally, I'll give you my target price and two different ways that you can play this trend into your favor right now because there is a bearish trend on Nvidia. So let's go ahead and start taking a look at it. On March 20th, 2025, man, that's hard to say sometimes, we saw the death cross happen on Nvidia. It is typically a bearish signal for a stock, for an ETF, for the market in general, anything that prices with a large amount of trading where you can trust the technicals, and Nvidia certainly is in that camp. On average, the death cross forecasts lower prices over the following 3 to 6 months or so. I think that we could be looking at a summer that is going to be rough for not only Nvidia, but the rest of the AI names and large cap tech. I'll get into that commentary and outlook here in just a second. But Nvidia shares are already trading towards a critical test, and I'm not going to tease you along the way here. It's the 20-month moving average. It's about $97, and if we break below that, we fall into a long-term bear market trend for Nvidia. It happened in 2022, so those of you that sit around and say, hey, that's not going to happen, yeah, it just happened a couple of years ago. So let me also kind of go into, and we'll do this. Let's just do it with the technical analysis 101. What is a death cross? I want to give you a strong message. So a death cross is a technical analysis chart formation. So it's a pattern, right? And patterns in some cases don't mean anything, especially if it's a pattern that nobody else is watching. But people keep their eyes on death crosses. So what is it? It's when the 50-day moving average of a stock breaks below its 200-day moving average. And that's a bunch of numbers, but let's put it into plain English. It's when something faster, a faster indicator or faster trending line, moves below a longer trend, and it tells you that momentum on a grand scale has shifted. There is a reverse for that, or reciprocal for this, and that is a golden cross. Very well named, because when you see a golden cross, the 50-day is moving above the 200, and it suggests that now the stock has positive momentum. But the death cross is a bearish or negative momentum signal, and yes, it does have the implications that are this stock is going to move lower. A couple things factor into that. Investor sentiment, obviously, which is souring on the market right now, and how much the market owns that particular position. So in other words, if it's a position that's lightly traded, you can expect that it's not going to have a big effect. If it's a stock that everybody owns, like Nvidia, the effect is going to be grander because there are more people trying to get out. Nvidia is the most loved stock. We all know that. So watch very carefully because the crowd can affect this. So what about Nvidia's death cross? I mentioned 12 different instances that this happened, and that's since 2000. Now, these results are really interesting, and I think when you think about them, they are kind of stuck to Nvidia. You're not going to see many companies that are as much a buy the dip type of company that's going to help them get out of a death cross. It's happened, though. So on average, the stock returns 3.5% after 60 days. And these are trading days. So that's 3 months, 20 trading days per month. You've got your 40-day here, and then you've got your 20 days. So 1, 2, and 3 months. You can see right in this period between 1 and 2 months is where you really hit the soft spot for Nvidia. And we've got lower returns during that period. What I've done here, let's not look at the averages. Let's look at what happens when the results are positive and negative, because that's where you can start to forecast whether or not the stock is following the bearish path or the bullish path. They all come to give you, an average, obviously. So on average here, the stock is down. Let's go with that 1 and 2 and 3 month. 58% of the time you're down 17%. And then when you go out to 2 months, you're down 27%. And then when you get out to that 3 months, you're still down 25%. That only looks at the 3-month period. Nvidia's last, we'll look at that in a second, last death cross signal, we saw it move down for 8 months. It was 6 months, April to October. So this doesn't account for that further decline. And it was 68, 65% decline then. But I want to key you in on this, because that is what I'm watching very closely right now. That's the 10-day return. Are we following that pattern, or are we following a different one, is what you get in terms of a question. Here is your death cross. This is the chart of Nvidia. If I just simply measure from where that death cross happened, right here, there's your close, and move down to where we closed yesterday, 9.85. And today we're right around 9%, and that's 10 days in. So when I flash back to that and we look at the 10 days, you've got a 10.6 return if you're heading in that negative direction. And when I go back to that chart, we're down 10% right now, roughly. We'll round down. You can round up and say 9, but we're talking hand grenades and horseshoes right now in terms of where the price is. I want to point something else out on this chart while we've got it up, and that is Nvidia's bounced the last 2 days. We came back from some serious lows yesterday, and this is April 1st, rather. But we came back from some serious losses, and now we're trading around that $110 level. Stock's up almost 2% for the day. A little bit of a buy the dip here, but this is most important, a double bottom. Double bottoms are one of those technical patterns that you have to actually lay eyes on. It's not quantifying that death cross. You have to actually see it and say, hey, this is a double bottom. These are a very reliable indicator in terms of a stock bottoming on a short-term basis. You can see we had a double bottom here too, and it failed and resulted in Nvidia moving back down to those lows. So you want to watch very quickly, because that double bottom turns, we're going to see a hook, and this is going to move much lower faster. So let's not slow down just to look at the chart. I've got this chart, and this is the returns for Nvidia plotted for you as well. Is a fancy way of showing you that the stock can move higher. There's your averages in the middle, 3.5%. Here's your worst case, and we are on this path. We're right here right now. So according to that, the next 10 to 15 days could see this stock drop another 15%. That's what I'm worried about, especially with the tariffs and such coming into play. And we've got a jobs report this week. So I look at this and say we're right at a critical point. What's it look like compared to the last? That's the last 12. Now we're in a current signal, but let's zoom in and look. This is Nvidia's last signal. It happened in 2022. You can see right there, a lot of similarities right now. We came off the highs. They weren't necessarily in January like we saw this time. They were in December. Rolled lower. We see lower lows, lower highs. But the thing that's important here, you've got your death cross there, and we rolled lower all the way into June, which would be a May if you shifted this back, because this happened in April. Not in March. We saw it in March. Right now, we're literally following this same pattern. The stock over that time period went down 65% into October. October is that seasonal play. It's when stocks bootstrap themselves. I think you're going to see something along the lines of this type of pattern play out this time. Why? Well, let's look at the macro view here, folks. Economy is showing signs of slowing down. We just had Goldman Sachs tell us that the GDP is slowing, inflation may be going up, and the jobs market is starting to deteriorate. That is suspiciously close to the definition of stagflation. Not that we have to go into stagflation, but investors are starting to now worry about this, myself included. So we're seeing money that's moving into the sidelines. Long-term investors are pulling money and putting it into cash or safe haven. So that is going to affect over the next 4-6 months or so. Let's say it takes you to October. You've got some summer seasonality that's going to come into play. And right now, most importantly, AI stocks are getting reevaluated. Data center expansion by Microsoft and Meta is now being contracted, or they're pulling back some of their plans. I learned something from Steve Forbes once at a lunch or a breakfast dinner I was lucky enough to go to, and he literally told us, everybody in the room, there may be 30 of us, he said, you know what, when the CFOs start taking control of the companies, and it's not necessarily the CEOs, that's when it's time to batten down the hatches. And we're seeing some of these moves as capital expenditures are tightening up. All in all, it leads to a lower forecast for not only the market, but also Nvidia. Let's go back to the chart here, and I'm going to give you my targets right now using the chart. Right now, we're trading at 110. $100 is your next critical test for Nvidia. At $100, we're going to see the market come in and try to buy this. You could see we got very close, 105 or so a couple of weeks ago. You're going to see the market maybe come in. $100 is a psychological strong level for any stock. It doesn't have to be Nvidia. It can be a lightly traded stock. Psychological round numbers work. When I go and look at the monthly chart, though, that's when I start to worry a little bit more. Right here is the line of demarcation between a bull and a bear market. Right there, that 20-month moving average, it's at $97. A break below that's going to accelerate the selling. And you can see we fell into a long-term bear market just a couple years ago, right after that last death cross. So does a death cross mean you go into a bear market? No, but right now the circumstances and the location of that 20-month moving average starts to give us a little more potential that we'll see the stock move lower. My target turns out at $80 right in here. We saw the stock bottom there in 2023 and find some long-term consolidation. I think that's where investors start to step in and say this is a great long-term investment. So how do you protect yourself in this case? I always tell even the most elementary investors, you don't have to try to time the market. You just use the trends to your favor. That's all you have to do. And when I mean that, I mean long-term trends. We're not talking about something that's going to happen over 10 days or 5 days or anything like that. This is not a signal for the traders. This is a signal for longer-term investors, and you trade it that way. If you don't want to sell your Nvidia stock, you can simply buy an ETF that trades inverse to Nvidia's price action. The ticker symbol is NDS. It is a TRADR. They're trying to say trader in a cute way, 1.5 times short Nvidia daily ETF. Now, when you buy the NDS, what happens is you're holding an ETF that is meant to go up 1.5% for every 1% decline in Nvidia. So if you have 100 shares of Nvidia, you could potentially buy 100 shares of NVDS, and as Nvidia goes down 10%, your NVDS will go up roughly 15%. Keep in mind there's some slippage and management fees and the things that make ETFs run, but you will have something that will go up faster than your shares go down, your Nvidia shares go down. Don't use this as a trade. Again, use this as a long-term investment strategy. When you're down 15%, when Nvidia is down 15, or let's say it goes down 20% and you're up 30%, simply take that money and buy the dip with the house's money at that point. That's how long-term investors are able to be successful. At minimum, as long as you're not causing any taxable events, you close your Nvidia now and let it go down 10% and buy the shares back 10% lower. Don't worry about calling the bottom. Just save 10% and that will compound as Nvidia goes back up. It's an easy strategy and very simple, and you're trading the trend here. But the NVDS will allow you to add a hedge, and you don't have to trade options. How about if you do want to trade options? And I myself am right now hedged on Nvidia with an option. So option traders may want to consider positioning for an immediate term target of $80. The October 17, 2025 Nvidia put, and that is an October expiration. Remember I said you're trading a trend. Don't cheap it up and buy a May or a June option. Let the trend play out, my friends. Nvidia 100 put that expires in October is what I look at in terms of a trading idea, and it's trading at about $1,000 a contract. More importantly, let's look at what you get for that. And I put together theoretical values using Black-Scholes model and what would happen if by July 1st, Nvidia were trading at $90, $85, and then $80. So you can get an idea of how this put option would price out. So as I mentioned, you've got a put that is 1,010 at last look. You're 199 days from expiration. That's with Nvidia trading at $109. We'll round up. It is the October 100 put, and this is April 1st. Now, if we fast forward, and all things considered, if we fast forward, theoretically, the price of this option, volatilities can go higher and lower. That October put on July 1st with 108 days instead of 199 days until expiration. If Nvidia's price is at $90, that option should be trading around 51% higher. 51% higher, and you move from $110 down to $90. At $85, that option is now trading at $82. And at $80, if it hits that target on or before July 1st, if it's before, that'll be worth much more, 118%. This is a way that you can hedge 100 shares by buying one option. And as I said, and let me be very clear about this. First of all, make sure you've got the education and the background to be trading options, the experience, because you can lose money when you're trading options, obviously. You can lose money trading the NVDS. You can also lose money buying and holding Nvidia. We all know that as well. So with all of these, especially the options, you've got risk. They're speculative, but you're using these tools to play that trend lower on Nvidia, which right now is, in my opinion, the smart trend to be playing. Also, if you're using this as a long-term investor, keep your investment objectives alive. Nvidia, on a long-term basis, this stock is not a sell. When we look at it at a long-term basis, here's where I see the stock going. I'm cautious on all technology stocks. I think that the AI revaluation that is going on right now is going to continue to affect prices over the next 3-6 months or so. This earnings season is going to be absolutely critical. Nvidia has been actually shrinking the amount that they've been beating expectations for by, especially on the the revenue side. If they continue that trend, investors are going to continue to value the stock, and you'll continue to see lower prices. This at $80, Nvidia is, in my opinion, a buy the dip opportunity for the long-term investors, and I use dollar cost averaging when I'm buying a stock like this. Buy it at 80, buy it at 75, buy it at 70, et cetera, and eventually I benefit from that average lower price. Long-term shares, I see them moving back up above 100 and to $150, but I think we have a long way to go before we start talking about that, as Nvidia looks to be slipping into a bear market. That is it. I've given you a couple ways that you can trade Nvidia right now. That death cross suggests right now, especially the path we're on, that we're going to see possibly 20, 25, 30, maybe even further lower prices before Nvidia posts that bottom. And at that point, I do turn into a long-term bull. This is a trade, and I hesitate to call it investment because we're acting defensively, but it's a defensive position that will allow you to hedge your position on Nvidia and hopefully increase your buying potential at some point when the stock does hit those lows. Be careful out there. Keep checking back for more content here on our YouTube channel. Make sure you like and subscribe as well, and sign up for that 5-stock watch list every week. And this week we just focused on defensive stocks. Every week, we give you 5 different stocks to watch: a growth and income, a large cap tech company, a dividend yielder, and then a stock under $10. And we can throw in a bearish idea as well. So it's great information delivered to you every Monday. Until next time, I'm Chris Johnson with Monday Morning, wishing you the best trading success. Have a great day.